Have you ever really thought through all the pros and cons of being paid as a 1099 contractor versus a W 2 employee? Keep listening as we dive in. Welcome to the Money Meets Medicine podcast, where we talk all about the personal finance topics you wish you had learned in medical school. I'm your host, Justin Harvey, and here is your co host, who is currently recovering from shoulder surgery, Dr. Jimmy Turner.
Yeah, man. Had surgery 3 days ago, and it's been an interesting experience. I'm an anesthesiologist, right? So, I put people to sleep, and my kids joke all the time. Like, my daddy says that, he doesn't just put people to sleep, he makes sure they can wake up. So, it's an important job, do nerve blocks, provide pain relief, put people to sleep, wake them up, try to take really good care of people. But at the same time, I don't really see the perioperative workup from a MRI standpoint, like what people look like after the fact. And so I got an MRI and it showed that I've got this distal clavicle osteolysis. It turns out lifting weights every other day for 3 years will eventually get to you if you're lifting heavy weights. At least it will for my body. And
Wear
this
out
like,
or rust out, dude.
yeah, that's right. Exactly. Right. But it got to the point where for the first time in my life, I really understood lifting and nutrition. I was setting PRs despite being 40, which maybe that should have clued me in on what I was doing was dumb. And that said, like the MRI, yep, your distal clavicle is all jacked up. You also have maybe this small tear in your supraspinatus. And long story short, ended up having a much more extensive surgery. I now have like 2 labrum repairs, a full thickness rotator cuff repair. My bicep was repaired. Oh, and they still did the distal clavicle. And so I thought I was gonna be out for a week. I'm gonna be out for 6, it turns out. But my surgeon, big shout out to Dr. Ben Graves, great friend of mine, good surgeon. If you need surgery and you're in the Winston-Salem area, highly recommend Ben. But he expects a full recovery and it should be good, but it's just gonna knock me out for longer than I anticipated. And it's always moments like this, Justin, where it makes me realize my financial situation that I talk about so much on the show, but it's a reality, right? Like I can't get individual disability insurance because an insurance agent didn't tell me about the right kind of policy when I was in training. It always seems like this theoretical thing, like, oh, do I really need disability insurance? Like, I don't know. Nothing's probably going to happen. And for me, when stuff like this comes up, now I'm out for 6 weeks. Now, granted, the surgery went really, really well. And so I expect this to be a complete non issue 6 weeks from now. But that said, I'd be lying if I said, hey, this isn't crossing my mind as someone who's now out of work for 6 weeks with this more extensive shoulder surgery than I anticipated. And actually, just so I got an email the other day. I get all the intake forms for people when they submit requests to get disability insurance through Money Meets Medicine. We obviously help people with disability insurance at Money Meets Medicine. And the reason why is because I don't want what happened to me happening to anybody else. And man, I got the heartbreaking email we get every single year, despite the fact that I scream this from the mountaintops, from this very microphone where you're listening to me right now. Please get disability insurance when you're in training. And sure enough, it's October. We're past the 90-day window where that guaranteed standard issue disability policy, the one where you don't have to do any medical underwriting, you can have medical problems and still get disability insurance, but it goes away 90 days after training. And had someone submit a request and they had a whole bunch of medical problems and they finished training in July and it's the middle of October now. And every year I'm like, I feel like I scream this from this microphone and through the email list that we have at Money Meets Medicine to make sure people take care of their disability insurance before they finish training. But every single year, man, I get this email where they just missed the deadline because for whatever reason, they put it on the back burner. They didn't take care of it. And so if you're listening to this, please don't let that be you next year and next October where you're like, oh, I meant to get disability insurance and I've got anxiety and I had that one shoulder repair like you did, Jimmy. And I also have, diabetes or whatever other medical problems you have. Like you have to get disability insurance when you're in training. It always breaks my heart. And it happened again this year, literally last week. And I'm sure I'm going to get more emails in the next 2 weeks of similar situations, despite how much I tell people you have to do this in training.
Especially for the GSI option, which you just never know what's going to pop. And having access to that, I actually heard a new one, and I've been doing this for a little while. So for me to bump into a new one, I heard a physician who was doing some like mental health counseling, had like a rough patch during residency, broke up with their fiance, and they were going to therapy, consuming alcohol, probably in slightly more than baseline amounts, which was then documented by their mental health person. And then
Mm,
this person got dinged and was causing underwriting issues for something that this person looked back and said, yeah, sure, I probably should have laid off the red wine, but there's no lingering, like, I'm not an alcoholic. I was down on my luck.
yeah, it's a
And
moment in time.
and now there's issues with underwriting. And it's like, holy cow, I've never even heard of that. Makes me want to not talk about, any of my hobbies with anybody who has access to an EMR. But
Yeah,
that's just
it's
another example of like having the GSI, if appropriate for you, but like having access to that without any medical underwriting needed, just it removes any possibility of a weird thing coming out of left field and making it so that you can't get the coverage that you need.
Yeah, 100%. And most doctors don't realize like 50% of doctors who apply either get denied like I did. They get an exclusion where they say, hey, that one shoulder surgery you had, if you get disabled from something with your shoulder, we're not going to pay you. It's excluded. Or you get a modification in terms of, or a rating in terms of, hey, you're higher risk than most docs, so it's going to cost you more. Most people don't realize that that's a large number. It's like 45 or 50% of doctors that apply have that situation, which means that the GSI would have been the right move. But that GSI is only available in training. So
Yeah.
as I scream this right now, put this on your mental checklist. Please make sure you do that. If you need to get quotes because you don't have disability insurance, you can go to moneymeetsmedicine.com/disability. We literally help doctors with disability insurance every single day. My buddy and partner in crime, president of insurance at Money Meets Medicine, Michael Kittner, is on the other side of that. He'll help you with it. He's amazing, walks you through it step by step. But I just wanted to mention that as I had shoulder surgery. And then I also had that email this week that came across my desk. So there's two things in 1 week that reminded me how important disability insurance is and how often people unfortunately put it on the back burner because they're in training and they're busy learning how to be a good doctor. And I totally get that, but you have to get it done. So Justin, I thought it'd be a good topic to talk about today. We're not talking about disability insurance, actually. We're talking about 1099 and W-2 offers because this is something that I didn't really have a lot of understanding about when I was in training, and a lot of people didn't really talk to me about the difference between these two things. But there are obviously different offers you can go out and get once you get a job. One of them might be a partnership track where they say, hey, we're going to pay you X number of dollars for a couple of years. And then after 2 years, you're going to be a partner in the practice. But the other offer that people often get is an employed position or an independent contractor position. They say, hey, we'll pay you 1099 or W-2. And comparing that is often apples to oranges unless you think about it the right way. And it's my experience that most people don't consider all of the things that they get when they get a W-2. And so they're like, oh, I'm going to make 440 as a 1099 and I'm going to make 415 as a W-2. And so I'm going to take the 1099 job. I'm like, maybe let's look at the math a little bit. So I thought maybe on the show, we'd say, hey, what are the things that go into this that make it more of an apples to apples comparison? So that if you're considering making a change and going to locums for a 1099 opportunity and giving up your current W-2 gig, or maybe you have an offer on the table where a job that you're looking at's saying, hey, we're willing to pay you either one. Which one do you want? And you're negotiating which of those two deals makes sense for you. And I've personally gone through this exercise at times during my career as I've considered jobs that are out in the market. So maybe let's start with the big one, which is if you've always been a W-2, something no one considers, which is taxes. Because if you've never run a business of your own and you haven't been paid 1099, then you're probably not aware that taxes from your paycheck are paid on two different sides. One is the employer side, one is on the employee side. And if you've always been paid a W-2, you've always paid the employee taxes and you've never had to worry about the employer taxes. And that number ends up being consequential for two reasons. And actually, it's consequential even for a W-2 because I remember when I was like 4 or 5 months into my first years in attending and my paycheck just went up by like $1,000 one month. And I was like, what in the world? Like, why is my paycheck going up by $1,000? Like, did they forget to take taxes out of my paycheck? And it turns out that there's something called the Social Security wage base, which basically says, hey, we're going to charge you like right around 6% up until I think it's about $170,000 for 2025. But after $170,000 in income, you've already paid your into Social Security and you no longer have to pay that anymore. And so your paycheck goes up by 6% the next paycheck and every paycheck after that for the rest of the year. And so this isn't just a 1099 W-2 thing. As a W-2, you might wonder, why does my paycheck go up every year once you meet a certain income threshold? And that's the reason why. But as the employer, if you're a 1099, you're paying the employer and the employee. You are both the employer and the employee. So now you're not just paying the 6% on the employee side, you're paying the 6% also on the employer side. And so you now have a higher tax burden. And it's a significant number. I mean, if you look at this for like a $400,000 job, it ends up being about 16 grand a year in taxes that you're paying on a 1099 income that you wouldn't have to pay on a W-2. So it's not a small number.
Yeah, this is one of those things. Once you sort of peer behind the curtain of the social security. Because, when we talk about taxes, people think, oh, perhaps you're vaguely aware of the federal brackets. And, oh, I think it maxes out at, 37 or is it 39? And there are people who live in states where there's literally no state income tax, which good for you. I'm jealous.
Yeah.
But if you're in a state with state income tax, 9.9% here, I'm just north of California where the top margin is in the double digits. Similarly, on the East Coast with the New Yorks and the New Jerseys, it's high. You throw that on top of the federal, and then you see this, oh my gosh, there's another 15.3. Then you start doing the math and you're like, more than half of my money is not going into my pocket. And
Yep.
that's when people become raging libertarians and they didn't realize they even had it in them. But
So
this
true.
is for many an elucidating process where you, having only been W 2 for a long time, you see the other half of Social Security. You realize that 15.3 sits on top of the Fed and sits on top of the state. Plus, maybe you have some local stuff. I've got some local stuff here, but I'm done complaining because I know I do that a lot on this show. And so you got to figure all that out and realize there is another big bite. Sure, you get the higher 1099 number, but there's a big tax bite that gets taken out of that. And it's often still worth it, but you got to make sure you build that into your assumptions because you're paying the employer half of Social Security and Medicare that you didn't have to cover before. And that was just like built into your paycheck that perhaps you never even really looked at because you just looked at the net number and figured you're good to go.
Yeah. So maybe let's give an example here. And so we can do an apples to apples comparison or as close as we can get. So if we use that $400,000 income and we say that taxes can be about $16,000 a year if you include Social Security plus Medicare, which is another 1.5% essentially on every dollar that you make. And there's no cap to that, like the wage base for Social Security. So let's call that $16,000, 16,250 is what it shakes out to be. Another thing that people don't think about or consider until they go to leave jobs, and we talk about this on the show sometimes where people get trapped in a job because they start to realize the number of expenses they'd have to pay in order to move, like selling their house. But another classic one that people forget about until they go to move is malpractice, right? And so in North Carolina, let's just say that the average malpractice for an anesthesiologist for a single year's premium is $15,000, which if you listen to the show in the past, if I wanted to move and I didn't have tail insurance coverage, the premium for that would be twice the annual premium. So that'd be $30,000. If I wanted to move and take on a new job, I'd have to come up with 30 grand to pay for my tail insurance for malpractice. But the annual premium, give or take, is about $15,000. And so now we're looking at about 30 grand, right? If you include taxes, malpractice. I looked this up on my paycheck, Justin, because I was like, I'm going to prepare for this show and I'll make these real numbers. At my employer, which is Advocate Health, so Wake Forest School of Medicine, which is now part of Advocate Health, they pay about $15,000 from the employer side towards my health insurance on my behalf, which as I look at that number, just seems absolutely preposterous and makes me ask all sorts of questions about how unaffordable healthcare is in our country at this point. But let's just give it to them. Let's say that it is $15,000. Now we're at about 45. And then they give about 6%, let's call it, in matching. If you include the matching plus contributions, that's another 24 grand. So if you start adding all that money up, basically that $400,000 W-2 salary plus the benefit ends up being about $470,000. So it's right around 20% difference. And I know that you've got some rules of thumb that maybe might be useful to talk through in terms of how to consider a W-2 versus 1099 offer, like what percentage difference should it be? But before we get to that, you also mentioned a couple other things before the show that I didn't think about. So I thought about malpractice. I thought about health insurance. I thought about 403B or 401k matching contributions, and then of course taxes. But then you had a few other ones that you mentioned. I was like, oh, that's right. Those are good things to point out.
Yeah, and I'll get to those in 1 second. One thing I would mention is that MedMal varies widely based on specialty and state. So the number you just threw out was kind of like low
Yeah, for sure.
compared to like the OB in New York City, who is going to be paying many multiples of that. Or other states where I've had clients that have to cut the check for tail, and it's like a surprise invoice you get in the mail, and that is a very painful 5-figure event. So don't assume your MedMal is going to be 15 grand, ladies and gentlemen. Figure out
Yeah.
based on your specialty, based on your state, which every state has its own sort of legal environment, and insurers underwrite that risk differently. And obviously, specialties, if you're procedural versus non, there are differences there. In terms of
Right.
the other stuff I mentioned, you want to consider if you're doing this sort of A B test of self employment versus W 2, you want to understand, are you looking at what I'll call a benefits rich environment where a lot of the compensation comes in these non paycheck ways? So a couple could be contribution to like a 401A plan or another non discretionary retirement plan that sometimes municipalities or academic centers will chip in some money on behalf of their employees. In some states or some systems, there's also a corporate pension or a municipal pension if it's a government, where you're paying into a system and maybe your employer is contributing as well. And there's an annual amount of income at retirement that has your name on it. So Kaiser is an example of a commonly known health system that has a nice pension benefit. If you work there for 30 years, you get a big chunk of money each year that's the equivalent of 2 or 3 million bucks of portfolio value at retirement. That puts you way above the sort of rules of thumb in terms of, oh yeah, 15 to 25, maybe 30% differential between the 1099 and W-2. If you're looking at something like a Kaiser, where there's a lot of these, or a local municipality where there is a big 401A and there's a municipal pension, you got to make sure you build that in. If you're comparing to an academic center that has tuition reimbursement and you have like a bunch of kids that you are hoping are going to go to college, and God only knows what it's going to be by the time your kid gets there, 40, 45, 50. If it's a full tuition benefit per year per kid, frankly, there's no self-employment that's going to make up for that. So you got to understand the tuition coverage, if it's a percentage of coverage or if it's full tuition at the institution, that can be really meaningful as well.
And I think it's also really hard thinking through this because this is something I like to point out to people, which is that benefits are not guaranteed. So, what do I mean by that? What I mean is that if there's a benefit that's costing your employer a lot of money, they will and probably do every year examine that and look at it and say, do we want to keep doing this moving forward? And so the tuition benefit is a great example of this. So at Wake, when I signed up, there was a tuition benefit that I'm grandfathered into as someone who's been around long enough at this institution, but it's not something that's offered to new employees that join Wake now. Right. And so that's because they looked at that and said, this is expensive. And so we probably don't want to keep offering this in perpetuity to all of our employees. And in fact, I think it's limited to the faculty or physicians that work at Wake. I'm not sure exactly who all qualifies, but I know it's not everybody. And so that said, that's a benefit that the hospital looked at and decided probably not worth us to do this anymore. And they no longer offer it. And so as you make these decisions, I feel like from a psychological standpoint, like there's the math question, right? Of course, which is probably, let's say 20 to 30% is the number you need to land at in terms of how to make these things a little more apples to apples, big picture rule of thumb. But psychologically, a lot of these decisions are made from, oh, well, I've got this amazing benefit. And so I don't want to leave because then I'm going to lose that. And then it turns out 5 years down the road when your kid finally gets to college that they remove it anyway. Right. Like you can't be making a decision from a place of FOMO, like, oh, I've got this one amazing benefit. It's like, well, that benefit's not guaranteed. And you also don't want to make the decision from a place of FOMO of, oh, if I don't take this job that's being offered to me right now, I'm never going to have another one offered to me. Because that's also usually never the case. No, not never, but very rarely is it the case that there's never another job opportunity that you could take. And so making this psychologically from the space of as apples to apples, math, logic as we can, and less about fear of missing out, whether that be the tuition benefit or fear of missing out that this one job opportunity is going to be the only one that's going to come. So you take a bad job because you're scared that you're not going to have another offer on the table. That's not the place you want to be making this decision from.
Yeah, absolutely. And in addition to the benefits that you're leaving behind, when you're considering self-employment, you're considering the 1099 role, it's also important to incorporate the quantitative considerations and the qualitative considerations. It's going to cost you more money to administer, and it's going to be an increase in complexity that you're going to have to deal with. And the costs and the complexity, I mean, complexity is a funny thing. Like to some, Jimmy, there's cases that you're like, this is not a complex case. But if I'm the one doing the anesthesia, it feels pretty complex to me.
Sure.
So you'll have to figure out kind of where you fall. But if you're self-employed, if you do the 1099 job, you got to keep books, meaning you need a record of all the income that you receive as an independent contractor. You need to keep track of your spending. You might need a bookkeeping software, or at minimum, I mean, you should use bookkeeping software. But if you had, like, I have seen cases where
I
you
hate
just
bookkeeping software
CPA.
so much.
Yeah, you hand your CPA a bunch of bank statements and credit card statements, and they cobble together financials for you, and they'll send you a bill for that. Thank you very much. As well, they should. So there's tasks, there's hard dollars associated with that, as well as the sort of complexity of if you're doing that yourself, that's going to be annoying at best. You're probably going to need a different kind of CPA. You can't go to TurboTax anymore, or at least you shouldn't. And you can't go to H&R Block. You probably need like a bona fide somebody who works with business owners. You may need a more, I'll call it like a premium financial advisor type of person who can help you make sure your taxes look okay, perhaps help you with a self-employment retirement plan, and give you the context of, well, here's how it works now. You might have to make quarterly tax payments, and this is like the process, and here's how it works with safe harbor versus prior year and current year, and somebody to sort of explain that to you. And then there's do I need an LLC? Should I do an S election? I might need a lawyer involved depending on the state. How do I think about the levels of income and the point at which the S election makes sense? So maybe if I'm rattling all these things off and you're like, listen, I have been listening to Jimmy's show since it started and none of this stuff intimidates me, then great. There's no order of magnitude complexity increase for you, and you should probably just consider that self-employed option. However, if you are somebody where I'm throwing all this jargon out there and you're just like deer in the headlights, all right, well, then we got to price that in and we need to make sure the self employment opportunity has enough margin in terms of like, I'm making enough more dollars that I can pay for a good CPA, a good financial advisor. I can make sure that I have a bookkeeper and I can make sure that all of this stuff is properly administered and doesn't create a big tax problem for me down the road. So as long as you're building that in, it's fine. And you don't need to be an expert in all these things, but you just need to hire a couple experts to make sure that you get the help you need.
Let's give a concrete example of why that might be super helpful. So you mentioned the LLC and S selection. So basically being taxed as an S corp. And without diving too far into the weeds, basically for an S corp, you pay wages and distributions, right? And so you have to pick a reasonable wage, and no, you can't say $0. It does need to be reasonable so the IRS doesn't audit you or place you at higher risk for being audited. But your salary is taxed differently than your distributions. And so there are tax advantages potentially to filing as an S corp that you would want to have a financial advisor slash CPA take a look at to run those numbers for you and say, hey, what is the break even point at which filing as an S corp actually saves you money, and how much money will it save you? And ideally, in that situation, it would save you at least enough money to pay for your CPA and hopefully some of your advisory services that are helping you set that up. But that is something that you might not even think about if you were just taking a 1099. You've never been an employer before, you've never run a business before, you're not an entrepreneur, you don't have that experience. And so that is an example of something that actually could be a big benefit of being a 1099 employee, is the tax savings that can come from your tax selection as an S corp, or potentially saving money that you might not otherwise get to save as a W-2 because now you have business expenses and you're the employer now. Remember, you get to be an employer, so you get to save on business expenses too. And so there are situations where there are potentially large 4-figure, maybe 5-figure tax savings that you could have, but you're probably going to miss out on a lot of those if you don't have an expert who's checking the boxes and dotting the I's and crossing the T's, because there are things that you probably don't even know to think about.
Yeah. And this is a place where if you don't have like a financial quarterback in your life, it does make sense. I've seen a lot of permutations of this that can work. A good financial advisor is a natural opportunity to say, like, this is my translator. If the CPA is talking about payroll and corporation tax filings and I have no idea what's going on, like, I need someone I can trust to explain it to me. In some cases, a good tax preparer can actually, I've seen cases where they are that quarterback, but you're probably going to be in a situation where you need to be willing to ask stupid questions and you need to have a trusted person to whom you can ask those questions, who knows enough about all of the moving parts to be able to translate it for you. And if you don't see a possibility of having that sort of guide, then you either need to get way smarter in these technical topics, or perhaps you should consider a path of less complexity.
Yeah, I think that this conversation usually brings up a personality conversation for me, which is, what kind of personality are you? Are you the kind where you want to pay for someone to mow your lawn and do the dry cleaning and just handle things for you, and you're willing to pay a premium so that you just don't have to worry about those things? And in which case, a W 2 employment situation may make more sense for you. Are you the kind of person who gets a little excited about potential savings and opportunities and flexibility and maneuverability and the ability to control things at a much more micro level that give you opportunities that you would not have as a W-2? And if that sort of thing gets you excited, maybe being paid as 1099 or running your own business makes more sense. And so some of this is math. What are the offers? You need to bake in that 20 to 30% difference to really kind of get there or make it more apples to apples. But some of it's psychological, right? The fear of missing out piece. And some of it is, what's your personality, right? So for me, I know, thinking through this situation, I've run a business before, and so some of this stuff doesn't scare me. Now, I will say I'm an interesting hybrid of those two personalities, where I definitely do not mow my own lawn. I definitely pay for someone to do that because my time is worth something. I also don't want to pay for a $7,000 mower because we have this giant hill that a regular mower would not be able to tackle. And so I have a W-2 personality in some ways, where I just want to have people in my life that can help me handle things, even if I know how to do it myself, right? That dot the I's, cross the T's group is how I'd often describe this on the podcast. Lots of doctors know a lot about money. You listen to the show every single week. You're one of the 10,000 people that follow the show, and you know a lot about money, but you still want an expert to help you make sure you're not doing things stupid. Like, there are some financial areas of my life that I fall into that box myself. And so as a 1099 employee, like, this is one of the situations where, like, if I did that, I would actually probably consider getting some financial help. And it's not because of a lack of knowledge. It's because I don't want to have to actually take care of those tasks myself. So it's more of an offloading of these financial tasks to get the help from someone that I trust. as opposed to a lack of knowledge or a lack of know-how. And some people are like, absolutely not, under no circumstances. I'm a DIY person. I would do it all myself because I enjoy doing it. I love learning about it, and I don't want anybody to help you. It's like, that's fine too, but it's a personality thing, I think.
Yeah. And I will never try to convince somebody otherwise. I mean, I might try a little bit, but I'm not interested in trying to turn a DIYer into a non or vice versa. I totally agree with you that knowing yourself in this area and your understanding your ability and aptitude and appetite for dealing with these things, or your ability to talk to professionals to deal with them, or if you're not interested in any of that, evaluate that first before you go thinking about making a jump like this.
100%. So as you're listening to the show, if you're considering a 1099 versus W-2, the rule of thumb is going to be somewhere in that 15 to 30% range. In other words, a 1099 offer should pay you 20 to 30% more than a W-2 offer to bake into all of the things that you would be getting as a W-2, from health insurance and malpractice and matching for retirement and all of that stuff, and the need to pay for advisory or CPA services. And so that's a rule of thumb. That said, it's going to be different for every single offer. So if you know all the numbers, you can calculate them and run the numbers yourself and say, hey, this is actually the difference for this specific job that I would need to make this make sense for me and my family. But otherwise, that's a good rule of thumb and a good place to start. And as you go towards that complexity, just recognize that you may need help. And it may be from a knowledge standpoint. It may be from a task standpoint. You just rather offload the task to someone else, even if you know what you're doing. And that's completely reasonable, of course, to do that. As we head out, don't forget, please, please take care of your disability insurance. As I sit here with my shoulder in a sling and I'm thinking about the email that we got this week. So if you do not have disability insurance, go to moneymeetsmedicine.com/disability. Takes 5 minutes to fill out the intake form, maybe even less. Mike will be on their side of that, help you out with it, go step by step through the process. You cannot leave training, in my opinion, without getting disability insurance, without taking major, major risks. So please don't do that. If you're listening to this or you're an attending physician who has trainees, please tell them they can all go to moneymeetsmedicine.com/disability and get help from someone that they know they can trust. Otherwise, Justin and I will see you next week. Thanks for tagging along. Cheers.